I think if you look at the trend in terms of Fed speak over the past month and a half, that it is clear that officials are expressing more concern with potential drag from market volatility and from external events. And in that light, I think it's actually interesting that the market didn't respond to the Fischer comments this morning because the vice chair's comments were a bit more balanced than that line of Fed speak that we had been hearing over the past several weeks. He did tend to de-emphasize what was happening abroad. And in that light, I would have expected it to be a bit hawkish relative to where the market was. I think the fact that we didn't get much of a reaction across currency space really just signals that investors have particularly low conviction right now, and it's going to be tough to build momentum for a trend, particularly ahead of the G20 meeting this weekend.
Well, that's really going to be key, isn't it? That's the biggest event risk out there. But ahead of that, we do get the PCE numbers, don't we?
We do, but I think unless you see a big surprise in terms of U.S. inflation, that it's not going to shift market expectations on the Fed. It's clear that over the past several months, investors have pared back their expectations, and it's going to take something big in terms of a turnaround from the real economy or a turnaround in what the Fed is saying to shift those expectations.
So how does last Friday's underlying inflation numbers, in which we saw the big jump, and we saw a number of the big banks actually change their forecasts for rate rises? We saw a complete change in the pricing in terms of Fed funds futures. It went from 25% to 40% following those numbers. And then the focus really lies on the favoured measure from the Fed, which is the personal consumption expenditure numbers.
Sure, it's certainly something that policymakers are going to pay attention to. But if you step back, I think that the market, its expectations on the U.S., they're probably a bit too grim at this point. We do think that the economy is doing relatively well, and we think that means that the risks to market expectations on the Fed are definitely on the upside. They're probably not going to go in March, but I think when we look later in the year, that they may move by more than what is priced in.
Okay, so you're expecting more than one hike then, clearly this year?
I think the risk is certainly on that side.
Okay. When you look at how this situation is impacting some of the other currencies, I mean, overnight, of course, the Japanese yen was one of the beneficiaries, I guess you could say, if you're long dollar yen. Sorry, if you're short dollar yen. How would you be trading that particular cross right now?
Dollar yen, I think that the risk is to the downside, at least in the short term, because I think what's helping to cap the pair is not just this pessimism that seems to be filtering through markets over the past 48 hours or so, but it's also the fact that we're seeing Japanese, or that there's a likelihood that Japanese exporters, the Japanese investors are going to have increased hedging needs into the end of the fiscal year, and that has the potential to cap the exchange rate. I think that we could see some downward drift from dollar yen.
Okay, so that's going lower. What about the Aussie?
Aussie, it's an interesting one because I think that so long as this market pessimism remains, that Aussie is going to struggle to regain traction. But if we look at Australia-specific factors, it doesn't really look that bad recently. It appears to be a bit of an island of stability amid all these global cross-currents. The yield is still relatively high. So if investor risk appetite does return, I think that the Aussie is well-positioned to benefit from that. It's well-positioned to benefit from this overhang of short positions in the market if investors start to unwind.
If, that's a big if though, isn't it?
Yeah, I'd be a bit skeptical ahead of the G20 meeting because I think that expectations for, a bunch of vigilantes to come in and rescue the global economy, they're probably a bit overplayed.